Hi, Srinivas here. Welcome to VJS Academy Stock Market Techno Fundamental Analysis course. Quickly go through the disclaimer. In the previous video, we discussed about what is stock market, what is cash market, what is futures market and all. In this video, we are going to discuss about who participates in the market, lot sizes and leverage. Before entering into the market, you need to know that who is participating in the market. Because as I mentioned in the previous video, in financial market, trading is a battle. You need to understand who is the other side, with whom you are fighting. So who is participating in the market? Foreign institutional investors, FIIs, they trade high volumes in stock market. Because of that reason only, every day before opening the market, we go through the FII activity of the previous day also. Domestic institutional investors, DIIs, mutual funds, insurance companies, brokers and portfolio management companies. They also participate in high volumes. Retail traders, individual traders like you and me. As a retail traders, we cannot move the market. We have to follow the market. Remember one thing, we are not market movers. We are just followers. Institutional traders form the trends. They form the directions. Only thing is we need to follow them, which means institutional traders are like sharks and we are like small fishes. So here you need to think like an institutional trader if you want to win the market. Say for example, if you are going against the shark, what happens? If it opens the mouth, simply you will be swallowed. In the other case, if you just sit on the back of the shark, what will happen? While moving on its way, it will clear path for you and it will take you to the destination. So if you want to win in the stock market also, you need to follow the institutional trader. In the future videos, in price action, we will learn all those things. What is the behavior of institutional traders, where they want to buy, where they want to exit, and all those things we will learn in the future videos. But you need to understand with whom you are fighting. Okay, and next, lot size. In the previous video already we discussed about lots. When it comes to derivatives, we buy or sell in lots. Lot size varies in between stock to stock. Depending on the price of the share, lot size will be decided. Periodically we can check lot sizes for various shares in the National Stock Exchange website and download the file. You can check that. See, go to Google and check with F&O lot sizes. It will take you to the NSE India website. Here you can see download the file for permitted lot size. You can download this. Here is the file. You can see here is the stock name and this is the symbol and all three contracts here. Say for example, Bank Nifty is 25 units is a lot. Nifty is 75 units is a lot. Apollo Hospitals 500 units is a lot. Just like this. HDFC Bank 550 units is the lot. Infosys is 1200 units is the lot size. You can open this file on your desktop and you can check when and you can check. You can open this file on your desktop and check whenever it is required. Okay. Approximately lot size will be varied in the value of 5 lakh rupees to 10 lakh rupees approximately. Say for example, Nifty is around 10,000. So 75 multiplies by 10,000, 7.5 lakhs. You can see Infosys 756. 1200 is the lot size, which means around 9 lakh rupees. Bajaj Auto around 2900. 250 is the lot size. So which means around 7.5 lakhs. Just like this. So when you trade in F&O market, futures and options, you need to be very careful because if you have 1 lakh rupees in your equity, in cash market you will buy 1 lakh rupees worth shares. But if you trade in futures market, Nifty lot size is 75 and it is worth 7.5 lakhs. After using the leverage or margin from broker, you can buy or sell that contract also 7.5 lakhs worth. After you take the position, if price goes down 1%, in cash market you will lose only 1000 rupees on 1 lakh rupees. But when it comes to futures, the same 1% you lose 7.5 thousand rupees because you bought the lot size of worth 7.5 lakhs. That is why when you trade in F&O markets, you need to be very much careful. And the next one is leverage. Usually brokers gives you 1:5 to 1:10 leverage on your equity. Why leverage? Leverage is for the speculation. Using very little of your money and borrowing the rest is called leverage or speculation. For example, if you have 1 lakh rupees in your equity, if you use 1:10 leverage, you can buy or sell worth 10 lakh rupees security. So using leverage is a double-edged sword. You may use profits or use losses also. So we need to use leverage very carefully and balancingly. Okay, in the next video we will discuss about bid and ask price. Thanks for watching. Bye bye.